Welcome back to the Festival of Learning, the next digital asset wave. I'm Ash Bennington. Listen, I'm really excited to host this panel, The Future of Crypto Policy and Regulation. We pre-recorded this show so that we could assemble this truly extraordinary panel. We have with us to discuss this topic, Seth Hertlein, VP of Policy at Ledger, Ryan Selkis, founder at Messari, and of course, Congressman Warren Davidson from the great state of Ohio. Guys, let's kick this off with a 50,000-foot overview of where we stand right now with regulatory, legal, and compliance around this space. Congressman, let's start with you. I know there's a lot going on in the world that's incredibly serious as we record here on Tuesday, October 10th, but where do we stand right now with crypto regulation?
Yeah, with crypto regulation, unfortunately, we don't have clarity. We do have Gary Gensler kind of creating some pressure to get there because he's basically causing havoc in the markets for the United States. And the good news is the courts have kind of put a check on what he and folks at the SEC have done, and kind of a strong brush back. I mean, in one case on the Bitcoin ETF denial, they said that his actions were arbitrary and capricious, which is pretty direct, blunt language from the court in that case. But Ripple XRP, a couple other cases going on. The courts are kind of making it right for Congress to say, you guys are going to have to do something. And so in July, the House of Representatives finally passed really meaningful legislation through the Financial Services Committee. So we haven't moved it through the full House yet, but the Financial Services Committee came together in a bipartisan way, passed a digital asset market structure bill, a stablecoin bill, Why Keep Your Coins Act that protects self-custody, and some other things that are kind of adjacent. So we do have a good body of work that hopefully we can move to the House floor. Right now, we're kind of caught up in a speaker fight. We're caught up in a funding path, and the fight over funding is kind of how we wound up with a speaker fight. But I think broadly, we have a path to move some legislation through the House. And then when you look in the Senate, there's some bipartisan work there with Senator Lummis and Senator Gillibrand. Our view in the House is that bill really misses the mark, but it shows that there are people at the table ready to collaborate. And so Chairman McHenry, the chairman of the House Financial Services Committee, is kind of leading those negotiations. French Hill and I are part of them as well. And French is the chairman of the Digital Asset Subcommittee in the Financial Services Committee. So a lot of collaboration going on. A lot of it, most of it is bipartisan. Frankly, we'd like the coalition to be a lot bigger. But, kind of to quote a somewhat famous line, so you're saying there's a chance.
Seth, over to you. What's your take? Where are we right now?
Yeah, I like that. So you're telling me there's a chance. Yeah, exactly. And I think to build on what the congressman was saying, both the Fit for the 21st Century Act, which is the market structure bill in the House, as well as the stablecoin bill, also passed the House Agriculture Committee due to the Ag Committee's oversight of the CFTC. Both of those bills passed on a bipartisan basis, so much so in the House Ag Committee that they didn't even do a roll call vote. It was a voice vote, which generally happens on bills that are not very controversial. So I think there's a lot of momentum in the House, notwithstanding the current uncertainties. It's a cloudier outlook, I think, in the Senate. In that the attention, for the most part, is on very different things. And we've seen a number of very problematic bills introduced in the Senate that I think are probably well-intentioned, but very, very misguided and would have pretty severe consequences for adoption of the technology in the United States, sort of doing the exact opposite of what Congressman Davidson and his fellow committee members are doing on the House side, trying to enable greater adoption and put the U.S. back on a path to leadership in the field. A number of also, unfortunately, on a bipartisan basis, a number of senators are sort of doing the opposite on the other side of the hill. But I think, as the congressman also mentioned, there's a lot of reason for hope coming from the courts on both the grayscale ETF decision as well as now two decisions in the Ripple case. And I think that's only primed to grow. I think Coinbase has put forth a very strong argument in their defense, and there's reason to be hopeful there. And of course, we're starting to look into an election year in 2024, and so there's a political angle to all of this as well to keep in mind. And Ash, if I can steal your job a little bit, that might be a great segue over to Ryan.
Indeed, it is. Ryan Selkis, I know you always have interesting things to say on this, interesting and insightful. What's your take? What's going on right now?
Well, I like to think in probabilities, right? And I think it's excellent that we've made as much momentum as an industry and engaging with leaders in the House and Senate as we have this year. I think it's a sharp contrast to previous years in terms of the energy and the actual time mind share that has gone to trying to get this balance right. I think Congressman Davidson's bill that got out of committee may be arguably the most important to affirm the right to self-custody as a constitutionally protected right. That said, I think in terms of the path to enacting some of these bills that came out of the House committee into law, or reconciling them, conferencing them with the Lemons-Gillibrand comprehensive legislation in the Senate, generally speaking, it does seem that the highest probability bill that we have would be something around stablecoin clarity. That has a chance of getting conference with the Senate. I think the other bills that may have a good chance, and potentially not a standalone bill, but potentially added to something like an omnibus package, would be something like the recent clarity over the custodian rule that was recently introduced by Congressman Hill and others, that fixes, I think, a glaring gap in custody law that otherwise would prevent any major institutional player from interacting and interfacing with crypto companies. And then, unfortunately, we have a pretty negative and potentially highly damaging bill that I do fear, especially in light of recent events, could be stuck in at the last minute to one of these must-pass bills, much like we saw with the infrastructure bill in 2021. And those would be the CAN-C Act and the Elizabeth Warren-sponsored Surveillance Act out of the Senate. That I think, those are probably the ones to be most concerned about. I think in a perfect world, we would get something comprehensive like the FIT Act or some version of Lemons-Gillibrand and the market structure clarity that the industry has so long been looking for. But right now, I think a win for the rest of the session would be stablecoin legislation that ensures that we can export the dollar and have safeguards around stablecoin issuance, and then clarity over custodial rules without basically crippling DeFi and peer-to-peer crypto in the U.S. by enacting one of these really terrible and I think outright unconstitutional surveillance laws that is drafted that some congressmen and senators might use this crisis in Israel to unfortunately pass.
Ryan, obviously a lot of moving parts there as we talk about this and break down everything that's happening. Let's go back to the congressman. Congressman Ryan Selkis mentioned the bill that you've sponsored or co-sponsored in the House. Talk a little bit about the philosophy behind it, what it seeks to do, and why you believe self-custody is such an important part of this space.
Yeah, I mean, it's called the Keep Your Coins Act, and we didn't actually accidentally choose KYC there. I'm not a big fan of the current KYC protocol, and it kind of gets at the whole idea that when you've shared your information with someone else, so you've set up an account-based system, you really don't have your own property anymore. You have a claim to your property, but someone else truly is in control of your property. And when a lot of regulators and kind of anti-crypto folks, people like Elizabeth Warren, have maybe conceded that, well, we're not going to be able to completely stop, crypto or Bitcoin or whatever, but now we can at least try to make it account-based, and then keep all the surveillance and everything else in it. But the other part that it keeps is the friction and the intermediaries. So there's always an intermediary between you and your property. And, they haven't completely made cash illegal, but they've made it almost impossible to access. And part of this whole unbanked and everything else, part of this whole broken payment system that we've got that has led, the innovation in this could be focused on eliminating intermediaries and all kinds of things. But the reason it got so much attention in currency is because the system of money has so many intermediaries and it's so inefficient. So if we don't protect self-custody, then you really don't fundamentally change the system. You might create a different architecture, you might do some novel, interesting things, but you can't really do DeFi without the D part, the decentralized part. And the core of that is self-custody. I think it's a fundamental property rights issue. And a lot of people are saying, no, we don't need regulation. That's just an opportunity for more problems. And I think the reality is, yeah, I wish that was the case, and maybe we'll win in court, but my job in Congress is also to defend the Constitution. And I think this is a fundamental property rights issue. And I do think it's core to the kind of innovation that's possible in this space is to protect self-custody.
Yeah, powerfully said, Congressman. Seth, over to you. This idea of that what makes this ecosystem so unique is the idea of self-custody, decentralization, permissionlessness. Account-based crypto really is, in many ways, I think, as the Congressman pointed out, just a glorified digital mechanism for big financial institutions to essentially continue to do what they do.
Yeah, that's exactly right. I mean, one of the things that we say all the time, I'll steal this from our chief experience officer, Ian Rogers. He says, if not self-custody, why crypto? Sort of nodding to the fact that there's really two fundamental innovations of blockchain technology, and that is one, the ability to hold your own value directly, and the second is direct peer-to-peer transmissibility, the ability to transact and interact with another person, directly wallet to wallet without having to go through an intermediary or a gatekeeper or someone that can block or stop your transaction. And with those two concepts being the sort of the core innovations of blockchain, if we take those away, or conversely, if users sort of voluntarily give them up, why is it any different than what came before? I would suggest that it's sort of not. If you pursue policies that sort of force centralization or outlaw in various ways, decentralization, we've sort of forfeited the whole reason for any of this to exist. Right? It really is about permissionlessness. And like, for example, the congressman mentioned, DeFi and the importance of the D part. And that's exactly right. DeFi doesn't work unless you can directly connect your own wallet to interact with these software protocols. And without that, we just have, a little bit newer, maybe a little bit techier version of account-based banking that's been around for 400 years.
Ryan Selkis, jump in. I know you have something to say on this.
No, nothing that Seth hasn't already said better. I'll reserve my time since that's in fashion now in Congress.
Very collegial of you, Ryan. Congressman, let me ask you this. Is there a sense in the House and in the Senate as well on sort of both sides of the aisle that this is truly a global competitive issue for the United States? I mean, look, just a casual observer would have to say that if you look at the Web 1 revolution, the Web 2 revolution, the United States has done very well indeed in terms of innovation, in terms of economic development. Is there a sense of urgency down there on the Hill about the potential risks of bad legislation or no legislation at all?
Yeah, I mean, look, Chairman McHenry created a digital assets committee, on purpose because he really wanted this to be a high priority issue and wanted it to get the attention that it has needed for so long. But frankly, even Maxine Waters had a, fintech task force, so you're capped at 6 subcommittees. She didn't create a new subcommittee, but she did give it some attention as a task force. So I think the idea that we need to be doing something is recognized across the board. Unfortunately, some people are drawing the wrong conclusions that are saying, no, what we need is a digital ID system and a completely permissioned architecture. I think a lot of people can't get, just to use Bitcoin as an illustration, there's no headquarters for Bitcoin. There's no CEO of Bitcoin. There's no one to give a warrant or a subpoena to, and that kind of scares them. And I think a lot of people think of it like a regular product or something, not a completely different computing architecture. So when you go through the education on that, sometimes they get even more scared because they can only think of a centrally managed, centrally controlled database where there's some administrator with superpowers. And I think that's where some of the folks love central bank digital currencies. And I think CBDC is a true threat, in my own view, to all of Western civilization, because everything about your money that is permissioned and controlled by the central government, and fundamentally erodes the whole concept of property rights for any place that adopts it. But aside from that, for a lot of people in America, they kind of get central bank digital currency, and they think it's a little creepy and dystopian. And if we don't successfully differentiate between CBDC and crypto, then I think they'll just say digital money, bad, don't want any of it. And for that reason, we, through the Financial Services Committee, passed an anti-CBDC bill. Tom Emmer's bill kind of became the lead bill of several that would put everything together in. And, I think if we're going to get colleagues in Congress to move legislation to provide legal clarity for the industry broadly, we have to make sure that this is very distinct and separate from central bank digital currencies. And, some of the sense of urgency has been say, oh, well, China's doing a CBDC, so we have to get there first. And I don't how are you not thinking through this? Even the people in China don't want Chinese money. They don't want the RMB. That's part of why there's such a flight of capital out of there. And the question is, why would we try to be more like China to compete with China? So in this space, our capital markets, stocks and bonds and other investments, we have 50% of the world's invested capital in our capital markets, but in crypto, you're roughly 75% of the liquidity is offshore. And, that isn't really serving even the intelligence community that really wants to spy on everybody and everybody's money. So everybody says, yeah, we do need to bring this into a regulatory system in the United States, but we are having a pretty healthy fight over what's the nature of it. And I think the easy, simple thing is account-based, permissioned, or, self-custody and permissionless are kind of the fault lines.
Yeah. Seth, as the congressman points out, there is just a tremendous challenge in terms of the mental paradigm shift that people need to make in terms of education, in terms of understanding this ecosystem more broadly, particularly folks who don't have backgrounds in engineering. The congressman points out that in many ways, CBDCs and DeFi are opposite ends of the spectrum. And it's strange because when you read, sort of well, we don't want to pick on any newspapers here, but you read a high level 50,000 foot overview in some of the popular newspapers, it almost sounds like those things get conflated when in many ways they're opposite ends of the continuum. How do you think about that? How do you think about that education process from where you sit at Ledger?
Yeah, I mean, I think that's exactly right, and really appreciate the congressman's leadership and opposing CBDCs and raising the general awareness of them. I think you're right, Ash. That very often, media coverage and even sort of just popular discourse, thinks about CBDC as sort of a government version of crypto. It's actually the opposite. It's the antithesis of crypto. In fact, it's sort of the ultimate perversion of blockchain technology. I've said a number of times before that in my view, CBDC is the most powerful tool for human oppression yet devised by man. So I think it's very important to sort of call out those distinctions and not to, sort of pretend that they're just slightly different versions of the same thing.
Right.
When in fact they're polar opposites. It is a challenge. The education is a challenge, and I think because it's so new and people have been so accustomed to sort of allowing intermediation, particularly in their financial lives, but in many aspects of their life. Reliance on big tech companies to keep their passwords, to keep their data, to keep all their documents, to keep their email. Right? We outsource all of that to to sort of large intermediaries to manage our daily lives in those respects. And it comes at a cost. Often it's not a visible cost, but there is a cost. And people have gotten a little bit too comfortable with that, I think. And so it's a little bit of sort of deprogramming and waking people up to the fact that there is an alternative that actually puts agency back in their hands, where it hasn't been for a long time. And it's a bit of a foreign concept. I often try to, I think showing is better than telling. So I like to put a wallet in their hands and, sort of walk people through how it works. And you can sort of see the light bulb moments when they realize like, oh, I get to control this, me and only me, and I can have it right here in my hand. And that's a cool experience.
Yeah, totally. And it's interesting, even though you understand it intellectually, the first time you actually interact with a non-custodial wallet and make a transfer and really get a sense of how the technology works under the hood, it really is a kind of an epiphany kind of, or eureka moment, I think, for crypto. Ryan, you and your crew at Messari spend a lot of time thinking about these issues, how to explain them to a broader audience. How do you think we're doing in terms of making that argument? I mean, I sometimes wonder when someone tunes into a conversation like this who doesn't have a lot of background and they see the four of us up here having this conversation at a very great level of detail and nuance, it's difficult to convey, I think, many of these issues to people who are relatively new to the space.
I think most people don't really think about their money that often either. So that shouldn't really be surprising. That this is almost more of a B2B conversation and B2G, I guess, with the government, particularly on stablecoins and CBDCs. I will say, I do think the devil is in the details with central bank digital currencies. And someone who just spoke at our conference last week, Ash, you may have caught this chat with Chris Giancarlo. He served under both Republican and Democratic presidents. He's a terrific chairman of the CFTC, is referred to colloquially and fondly as crypto dad by many in the industry. I think he could be a phenomenal SEC chair. And currently, he's working on the digital dollar project, which is a CBDC implementation, but that has privacy kind of embedded in it at its root. And some of the stablecoin versus CBDC conversations or anything payments related, I think it gets a little bit muddied and we get too hung up on the actual terms themselves versus what are the values and what are the architectural norms that are embedded in these systems. If you could have a private by default, provably private by default central bank digital currency and a provably private by default private public partnership for a stablecoin issuer, those are much, much better conversations to have than the conversation that we have today, which is basically CBDC bad, universally, stablecoins good. Well, maybe, but not if a stablecoin is ultimately just used, to Seth's point, that I think he may have been hinting at, as a public-private partnership that resembles the relationship the government currently has with big tech in terms of like its unconstitutional overreach and surveillance of communications and really anything that touches the big tech servers. So, I think that those defaults are important. And to me, those are the biggest risks and the biggest challenges that we have as an industry, is getting those defaults right, setting those defaults in the right area. And I think the Congressman Davidson's credit, again, I think that the Keep Your Coins Act is a step in that direction to affirming certain constitutional protections. And even for people that have no idea how the banking system works, how their money works, they just want to use these applications. If we can get these conversations right and we can kind of nail these debates in that education process with Congress, with the financial regulators, and find that balance between consumer protection, national security, and ultimately, civil liberties, which is the third, kind of ugly stepchild of the mix that seems to constantly be forgotten in favor of those first two. Then I think we can start to have a sophisticated conversation about what should the future of digital dollar look like, and really what value you're imbued in those digital dollars.
Right. In many ways, perhaps the investor protection component of that is the easiest one. Obviously, there's some significant challenges there. Ryan brought up the idea of national security. Congressman, I'm curious, do your colleagues down in the House ever pull you aside and say, Congressman, I know you're an expert in this stuff. Look, we live in a very dangerous world. There are folks who do not wish the United States well, and they're concerned about the national security implications of essentially having a non-bank controlled system where the dollar payment rails are no longer a significant choke point in the global financial system. How do you think about that? How do you think about the risks? How do you think about the opportunities and the solutions, Congressman?
Yeah, the false choice between security and freedom is nothing new. Ben Franklin has a great quote on it, and I'm with Ben Franklin. I'll take the freedom and liberty over the security, especially the false sense of it. And that's as old in the United States, most recently as the Patriot Act. Look at all the ways the Patriot Act's been abused to spy on people. I mean, frankly, that's why Edward Snowden said, he says he was trying to be a whistleblower, and he outed some of the ways that the federal government was spying on Americans because the Director of National Intelligence, Director Clapper, came to Congress and lied and said, no, this doesn't happen. And he said, yes, it does. And here's the receipts. So, since then, it's kind of become accepted by everybody that they do. And for a lot of people in the culture, they're like, who cares? And they're just so used to the idea that everyone's spying on everyone else and monetizing it. The privacy is completely trampled. And, the Fourth Amendment, like, we have a constitution that's designed to govern and protect a republic. But fundamentally, we've got a government that's trying to operate and maintain some sort of empire. And I think the path is to go back to a republic where civil liberties are protected. And the Fourth Amendment doesn't say, when you look at the Fourth Amendment that's supposed to protect privacy, it doesn't say if you have nothing to fear, then you have nothing to hide, then you have nothing to fear. It basically says you have a reasonable expectation to privacy. And so we have to, I think, protect that privacy. And I think we have to be cautious about these grants of power to say, oh, just to keep you safe. And that's where I've likened the central bank digital currency to, for Lord of the Rings fan, the one ring to rule them all, because it gives a sight into everything. You can see everywhere you spend your money. It's completely coercive for everyone who lived through the COVID area. People were like, well, I have to go to work. I have to make a living. I have to do this. And people made all kinds of choices that they didn't personally like or agree with because of, the fear of security or safety. And, I think here we can choose to do a different architecture. So Bitcoin, as an example, isn't secret in the sense that nothing's knowable. In fact, it's got some deficiencies that people are working, I think, in a great way to try to address with zero knowledge proofs, so that you don't really out the total balance in your wallet if you pay somebody directly out of it. So you do have to have some way to kind of have a little more privacy even than Bitcoin in my own view, so that you can kind of hide how much is in a given wallet. So on the other side, because you do have a permanent blockchain, it's an immutable record, you can, quote, follow the money. I mean, if you truly wanted to get away with something illicit, you wouldn't want to create an immutable record of all the moves. And as this new technology that is a decade or more old at this point, is becoming more widely understood, lots of firms are out there that can help state, local, and federal officials follow the money to kind of keep us safe. And we're doing an education event later in the month in Ohio to talk to our local prosecutors and law enforcement on how can you follow the money if it's crypto. And that's part of the fear is, FOMO right. is a fear, but FUD is another fear. And when you look inside law enforcement, that's one of the things that they've made the argument, like, oh, well, we can't follow the money, so we don't want to do anything with digital money. And we're showing, no, I mean, you got an immutable ledger, you can follow the money and you can solve some of these crimes.
So how do you think about some of those points about the alleged trade-offs between privacy and security?
Yeah, I mean, it's sort of a perennial issue. I mean, if you look throughout history, authoritarians always accumulate power by stoking fear and then promising safety. When, of course, they're acting, for their interest, and when freedom is ultimately in the best interest of the people. The Constitution, particularly the Fourth Amendment, the right to privacy, and the rights to property in the Constitution, don't have an exception for, when somebody deems safety to be more important, right? Those are fundamental rights that are afforded or should be afforded strict scrutiny by the courts. And I do think the courts have been a little bit lax in allowing those protections to get whittled away over the years. To a point where, I think the Fourth Amendment in particular, and right to privacy is, sort of a shadow of the fundamental right that it should be. And, there's no sign of that trend stopping or slowing down. Right, the sort of the big government, national security types use every crisis and every opportunity to take away more rights and freedoms from the American people. There used to be a presumption of innocence in this country, and the government used to have to prove at least probable cause to even, start investigating somebody. Now it's completely flipped. Now there's sort of a presumption of guilt, and the government absorbs through a number of different ways vast troves of information about everyone's daily life all the time, and it's right there to be searched whenever they want to find something to pursue you on, with no need to go through a courts or prove anything at all. I think that's at the very least a perversion of the Constitution, if not a complete abrogation of it. So I think we have a lot. We've lost a lot in a very relatively short period of time. I'm not entirely sure how to fix it. I know the congressman thinks about these things. Perhaps the courts will reestablish these rights, but I wouldn't count on them coming from the administrative or the executive branch.
Brian, any thoughts on this? We've talked about these different inflections about privacy and freedom. Any thoughts additionally on this, or anything else that you guys are thinking over there over at Messari? Because I know you have probably a slightly different view that you come to this with.
Well, at the end of the day, Messari is focused on research and data for the universe of crypto and the entities that are building, on these new technologies. The disproportionate amount of time that I've had to spend on U.S. policy in particular is nauseating. I got into this industry. I got into this technology. I got excited about this technology, frankly, because I thought that it could be the life rafts and the safety valves for a lot of what is broken with our institutions, whether you're talking about government institutions, big tech, other centralizing forces, that if you just look at public opinion or you look at any polling of the American people and kind of Western folks in particular, the opinion that people have of our institutions and the stability and general consumer friendliness of things like our banks, it's at or near all-time lows. And what I find, and I think Seth hinted at some of this, I would love to get back to talking about all the new novel assets, the new novel protocols, the new applications that are being built every day. But just like Godfather 3, like just when I thought I was out, like they sucked me back in, right? So it's always like one step forward, two steps back with these conversations. And I think people have the impression that Messari, as a company, does more in the public policy space than we do. Really, it's just me, and we have one enterprise analyst that's excellent at curating what's going on down in DC. But I feel that this is an opportunity for leadership, and you need the right people showing up to these conversations to avert the worst impulses of this government. And frankly, I think the battle that we're going to have in the next 14 months, and maybe in the next few months, is going to be one around narratives, not facts, in DC. And I do fear that this crisis in Israel, some of these international crises, are going to be used as a cudgel against the industry, those counterproductive ways. Seth, do you know anyone in the U.S. crypto industry that is excited or condones at all the illicit use of crypto to fund terrorist organizations like Hamas? No, I don't. No, I doubt you do either. And the irony is, some of the worst, most nefarious legislation that is designed to control and rein in and cripple this industry in the U.S. is going to be floated as a solution to some of these far-off problems that, frankly, are the result of poor legislation, poor regulatory guidance, and the offshoring of a significant percentage of the crypto industry to international exchanges with looser compliance controls. So if we want to solve the problems if we want to actually have the U.S. in a leadership position where you can make sure that the on and off ramps are well regulated and less of this activity happens using these new technologies, then the best way to do it would be to get some of these laws enacted that have already passed out of the House and, conference them with something like Lemmas Gillibrand in the Senate, and not just defer to the shrill Cassandra warnings of an anti-crypto radical like Senator Warren, who's going to use this crisis shamelessly as an opportunity to crack down on the industry.
See, Ryan, this is why I opened it up. I knew you had a lot to say on that.
That's why I reserved my time, Ash.
Well used indeed, sir. Congressman, I know you've got a hard out here. I wanted to give you the opportunity to do final thoughts, key takeaways. We've actually covered a lot of ground here today talking about public policy issues. Final thoughts that you'd like to leave our audience, our viewers, and our listeners with, Congressman?
Well, I think that Ryan alluded to it. It is an election year, and that does present an opportunity. And we're to keep the leader for Senate banking, Sherrod Brown's up, and if he wants to differentiate himself from Elizabeth Warren on so many issues, but certainly this one, this is a great time to do it. He's one of my senators in Ohio. Got to say, not a big fan. Everyone that's running as a Republican would be good on this issue. Sherrod Brown has been historically bad on it, but it'd be a great opportunity for him to, I guess at some point you can at least admit that you were wrong and do the right thing. And hopefully here we can actually get momentum going in the Senate and kind of down the whole ticket. Look for candidates that really are good on the issue, because, at the end of the day, everyone that's been in a company or a team or an organization, you can update the policies and manuals, but at some point you just got to change the people. So you got to get people that are going to go do the right thing on issues that are important to you. And certainly for this industry, this is the issue. We're going to disagree on all kinds of other things. And that's the reality. There's a lot of goodwill on a whole range of issues that doesn't make the news often enough. And I want to really appreciate the Democrats who've been good on this issue, not just on ag, where they were solid and moved the support what the Financial Services Committee did, but, in financial services in particular, when you have the ranking member opposing a bill, breaking ranks within your own team and supporting it, really is a little bit more political courage than a lot of people appreciate. So I really do appreciate my colleagues who've worked to keep this bipartisan.
Seth, final thoughts, key takeaways.
Yeah, thank you. We've talked a little bit about the Congressman's Keep Your Coins Act without really explaining what it is real explicitly. I think that and one other bill that I'll mention in just a moment, I think are the two most impactful, most important bills that have been introduced on crypto in the U.S. Congress. Just real quickly, Keep Your Coins Act really does two things. It says that federal government agencies may not prohibit or restrict the ability of citizens, one, to self-custody, to hold their own digital assets directly, and two, to transact peer-to-peer. Again, getting at those two fundamental innovations of blockchain technology. It's a bit counterintuitive that we need a statute to protect those things. Certainly the self-custody part, because arguably the government may not infringe on citizens' right to property without due process of law, although it does do that all the time, unfortunately. And so I think a restatement like the Keep Your Coins Act would give a lot of certainty to the future viability of the tech in this country, right? If we have that in law, that people can do the two fundamental aspects of the technology, then I think we have a pretty sure signal of its continued legality here. The other bill I want to quickly mention is Congressman Emmer's, Whip Emmer's Blockchain Regulatory Certainty Act. That just very quickly, what it does is prohibits the government from labeling or defining participants in the blockchain ecosystem as money transmitters or money services businesses, unless they directly custody client funds on their behalf. So it protects things like software developers, DeFi protocols, wallets, All of those sort of ancillary bits that make the technology work, but don't actually hold client funds. There's a risk that that FinCEN in particular, or some other offices within Treasury, might try to sort of sweep those in under the Bank Secrecy Act, and the Blockchain Regulatory Certainty Act would prevent them from doing so. If it were up to me, those are the two must-pass bills that the industry, the technology, the community really needs to see get passed. Both of them were successfully passed out of House Financial Services Committee in July. Unfortunately, on party line votes, meaning that not a single Democrat, unfortunately, recognized the value or the importance of those two bills. But those are the things to watch. Unfortunately, I think the state of the politics is it's unlikely that those bills get through the Senate. They could potentially pass out of the House, although I think something more comprehensive, like the FIT 21 Act or stablecoins, as Ryan mentioned, is potentially more likely. And then the last thing that I'll leave is has been some hints that the Senate Banking Committee is open to some sort of a deal, perhaps around the Safe Banking Act, which is sort of giving the green light to banks to provide banking services to the cannabis industry in exchange for something like stablecoins. So there's a possibility that those two things sort of get packaged together and may have a viable shot to get through the Senate. I think that's probably the best chance that we have to see crypto legislation get over the finish line this term.
Ryan Selkis, the floor is yours. Final thoughts, key takeaways.
No news is good news. I think that the landscape in the last 48 hours has completely shifted. I think some people will be slow on the uptake here. But if we got stablecoin legislation this session, great. Otherwise, I think we're in a political knife fight as an industry in the 2024 elections, and a clean sweep of this current slate of Democratic leaders would be catastrophic for the industry in the U.S. I think the best case scenario is that we have a change of control in the Senate, a narrowly divided House, and either a new Democratic or new Republican president in the White House. And until then, again, maybe we get minor improvements and fixes to things like the custodian rules, but it really is about avoiding some of the worst impulses of Congress in the aftermath of the national security crisis, like what we're seeing in the Middle East right now. And to the extent that we can win that short-term battle, it's probably the most high EV play that we can make as a policy apparatus, and we just have to hope that the narrative winds don't just completely move against us, and there are enough good faith actors that are going to look at the actual facts on the ground and the law as designed and as proposed is kind of consistent with their stated policy goals. So if that's the case, I think we'll be in a marginally better place at the end of 2024, but it's not going to really be earth-shattering improvements until we have new leadership in a couple of the different branches of government.
Congressman Seth, Ryan, thank you so much for joining us. This is a true deep dive on policy and regulation. We appreciate you joining us today. Have a great afternoon, everybody.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.